Morning, guys. It's Monday, June 23rd, 5:24 a.m. Central Time. Grain markets are mixed this morning. December corn futures down a half cent at 437 and a quarter. November soybeans down 2.5 at 1058 and a quarter. December Chicago wheat down a quarter cent at 605 and three quarters. December Kansas City wheat up a quarter cent at 602 and a quarter. December spring wheat is up a half cent at 676. Couple of housekeeping notes, guys. If you are not subscribed to the channel here on YouTube, make sure you click the subscribe button. It doesn't cost anything and will really help us out. Second note, I'm going on vacation this week. Mackenzie, you're the boss the next 4 days. Ryan Moe is going to be filling in for me. So, guys, I will be back on Monday the 30th. You'll survive without me. I promise. Ryan's got some really good stuff prepared. Let's start off with Iran, which was the big news over the weekend, of course.
So oil prices surged on Sunday night prior to reverting lower. President Trump said the U.S. attacks on Iranian nuclear facilities had obliterated key targets and warned of further action, while Iran promised everlasting consequences. Despite rising tensions, no physical disruption to oil shipments, especially through the Strait of Hormuz, has been reported. Iran has threatened to close the key shipping route, although doing so could turn its neighboring countries into enemies due to their oil production. Analysts note that the $10 per barrel increase since the conflict began reflects a risk premium that is already priced into the market.
People thought that this was going to be the biggest thing that ever happened coming into the Sunday night trade. And yeah, crude rallied $4 or $5 on the open, but it has since given it all back and traded lower early this morning. So we did post some fresh highs for the calendar year in crude oil overnight, but again, it has reverted lower. So I think a lot of this had been priced into the market. I suppose that maybe the market had a hunch that the U.S. might do something in Iran. Everybody on social media is now an expert on the Strait of Hormuz. I am not an expert. I'll tell you this, though. The statistics would indicate that 20% of global oil consumption passes through that strait daily. The Iranian government, I think, wants to close the strait for retribution's sake, but their neighbors won't like it if they do, because their neighbors are all oil-producing countries who export a lot of oil through that strait. So I think for the moment, it remains open the way that it sounds. I think they're talking about it, though. Look at this crude chart on a monthly basis, and we kind of went up and barely traded through this trend resistance area, but then kind of just backed off, and now you're back within the channel. So it's not the end of the world yet. Is it the start of World War III? I don't know, but looking at the crude oil market, I would say no, we're not there yet. This is a fluid story. We don't know what Iran's next move will be. We don't know what the next move from the United States will be. I think a lot of people thought that wheat futures might rally sharply out of this, and wheat futures trade mixed to lower this morning. So not quite the big reaction in the markets this morning that a lot of people had hoped for or maybe expected. Let's go to Friday's rally in the soybean market.
Right. So soybean and wheat futures traded fresh multi-month highs on Friday. The November 25 soybean contract traded its highest level since early February and nearly posted a fresh calendar year high. The December 25 spring wheat contract also traded its best level since February and has led the wheat complex higher in recent sessions. Concern regarding Middle East tensions paired with U.S. crop concerns have helped to push wheat prices higher. The soybean rally had been driven largely by positive biofuel news and also a relatively strong Brazilian currency. Both markets reverted lower late on Friday.
Great action in the soybean market. Both old crop and new crop posted, I believe, fresh calendar year highs on Friday. And yeah, we reverted a little bit lower. The soybean oil market had been kind of leading this thing in beans because of the biofuel news that we had out. I believe that was last week or 2 weeks ago. But in any case, we've backed off a little bit. You'd love to see this November soybean contract trade through that 1076 and make some new highs for the year and really break out to the upside. We haven't done it yet. Wheat futures have been acting very well. We don't have a CFTC report to give you today. They're going to have that out this afternoon. It's delayed because of the holiday. But I would imagine that the funds have covered some shorts in the wheat market, and that's part of the reason why you're seeing what you're seeing here. You've got excessive rainfall, I think, in some areas of winter wheat country in the southern plains where they're trying to harvest a crop. I think there's some disease pressure and quality issues, that sort of thing. And then in spring wheat country, the conditions are just not quite up to snuff. Everything's kind of running below average. So you got two markets that are acting well, and then you look at the corn market, and it is not acting well at all. With that, let's go to weather.
So, rainfall across the Corn Belt last week helped further alleviate lingering dryness. Conditions improved in Iowa, Wisconsin, and Minnesota. Currently, only 7.5% of the region is experiencing some level of drought, a significant decline from 32% at the start of the year. The High Plains also benefited from precipitation, leading to improved conditions in North Dakota and Nebraska. However, drought conditions did slightly worsen down in central Kansas. When we look at the percentage of U.S. areas experiencing drought, corn country 17%, soybeans 13%, winter wheat 14%, spring wheat 22%, and cattle country 19%.
Drought 2025 is really nowhere to be found. I mean, you've got some droughtish type stuff in the same areas where it's been for a while in your neighborhood, Mackenzie, Nebraska, parts of South Dakota, parts of Iowa, although it's cleared up a little bit. You got this pocket in northern Illinois, pocket in northern Indiana, but from a national standpoint, no, we don't really have a drought concern. This map is total rainfall over the last 7 days, and no, not everywhere caught rain, but a lot of areas caught rain. And if it keeps raining like this, the corn market is going to struggle for the next 6 weeks or so as the pollination window approaches. Over the last 14 days, this is data from our friends at Crop Profit. The U.S. corn areas have seen exactly 100% of their normal precipitation over the last 14 days. And when that's the case, the market is just not going to get concerned about drought or crop conditions or anything like that. Rainfall over the next 5 days will be mainly a western to call it like northern corn belt thing. Almost all of Iowa is slated to see some rain. Eastern parts of Nebraska and South Dakota, then up into Minnesota and Wisconsin. It kind of opens up a little bit more during the 5 to 10. You do have some dryness that is going to take place here in the Eastern Corn Belt during the next week, and then the rains kind of return, and that comes along with heat. The Eastern Corn Belt is going to run well above normal in terms of temperatures, and you guys have already seen a lot of this stuff in the 90s. It's supposed to back off during the 8 to 14, but I guess because there's been enough rain, the market is not concerned. One thing that I have noted, Mackenzie, or noticed, or maybe lack thereof, I haven't heard a ton of complaints about the crops. Seems like this time of year, you're always hearing complaints. The crops suck and the market's going down. What the hell's going on? So we would invite you guys this morning on YouTube. If you think your crops are going to be below trend, if you're growing corn or soybeans this year in particular, and you think you're going to end up below trend, drop us your location and tell us why. I'd be very curious to hear your thoughts.
If you guys have not checked out our premium content, you sure need to do so. Joe, can you tell our viewers about some of our recent premium videos?
I was supposed to be off on Friday, but duty called and I had to do some cash grain marketing. So we had whole bunch of new recommendations out on Friday. The way I do cash grain marketing is very, very simple. I throw out a percentage, a crop year, and I tell you, this is what I'm selling. And I will benchmark the sale to a futures price and then track it. And everything that I advise is tracked at the bottom of our email every single day. So if I advise a sale on June 20th, 2025, it's always going to stand at the bottom of the emails. Joe sold this on June 20th, 2025. I never re-own sales. I never exit sales. I make sales and then I'm done. And then I move on to the next sales. So if you guys want to see everything that I'm doing for corn, soybeans, and wheat, it's super, super simple to follow. It could not be more simple. You should check this out and just check out what I advised on Friday. We talked about the tight corn situation last week. Had a whole bunch of chart downloads available, everything from the U.S. to the world to Brazil, Argentina, Ukraine, China, why the corn situation is tight. Pete's doing Sunday weather updates for us, although admittedly, Sunday weather has not been overly exciting because the forecast has just been like, normal rainfall, normal rainfall, normal rainfall. We haven't seen a lot of big shifts in the forecast, but you still could. And we're going to do this for another month or so. If you guys want to see the premium stuff, go to standardgrain.com. You can sign up this morning. This is a $50 per month subscription. Ton of info from us every single business day, guys. Morning email is 5 a.m. Central Time. Midday video blast is 10 a.m. Central Time. We have a text message list that is optional, and we do reply to texts and emails if you guys have questions, concerns about your marketing or markets or whatever. Sign up this morning, guys. You can do it in about 30 seconds on your phone, credit card, Google Pay, Cash App, whatever you want to do. Give that deal a shot.
U.S. corn export sales increased last week. Net corn sales were reported at 36 million bushels. The print was up 14% compared to the previous week, but down 6% from the prior 4-week average. Japan was the largest corn buyer for the week. Net soybean sales surpassed pre-report expectations at 20 million bushels. The print was up substantially from the previous week and from the prior 4-week average. Germany was the largest buyer. Net wheat sales were reported at 16 million bushels. The print was up 10% from the previous week, but down 30% from the prior 4-week average. Taiwan was the largest wheat buyer for the week.
Corn sales were excellent. We are still ahead of the pace needed to hit USDA's projection, which was recently revised upward. So USDA may have to come up with that corn export forecast for old crop again. Soybeans, we're kind of middle to below average. Noteworthy is the fact that China hasn't bought any new crop beans from the United States yet, and they're kind of out of the old crop bean market as well. Wheat sales for the current marketing year, I don't even know where we're at, but are we somewhere in the middle?
Yep, we're right in the middle. Yeah, it was the fifth best so far.
We're just getting started in the marketing year there, so we'll see what happens. But the big highlight for me still is that the corn program is fantastic, and that this old crop thing is perhaps even tighter than what USDA has led us to believe.
U.S. ethanol production declined last week, but remains near record high levels. Weekly output of 1.1 million barrels per day was down 1% on the week, but up 5% versus the same week last year. Ethanol stocks remained elevated for this time of year, totaling 24.1 million barrels. The print was up 1.6% compared to the previous week and up 2.1% compared to the same week last year. According to Reuters data, U.S. ethanol production margins have softened over the last week.
Still very, very strong. And this is another bright spot for demand. Stocks are still a little higher than I would like them to be, but they have drawn down seasonally as they typically do. So I don't have anything bad to say about demand for corn via the ethanol industry. There is some debate about how well the ethanol producer is covered with regard to corn needs. Some people have told me they're covered out through the end of the marketing year. Some plants are different. I think it's regional also. Probably better coverage in the West, maybe not so good in the East because of crop issues last year. But all is good here.
USDA reported a flash sale of corn on Friday. U.S. exporters sold 5 million bushels of corn to unknown destinations for delivery during the next marketing year. Accumulated corn sales are up a whopping 26% compared to the same period last year.
New crop sale of U.S. corn, and we're going to need to see a lot more of that if we're going to hit USDA's projection for the new crop marketing year. They're projecting that we're going to do even more in terms of export business versus this year, and this year was fantastic.
We had a cattle on feed report come out on Friday. As of June 1st, cattle on feed totaled 11.4 million head, down 1% from a year ago, and consistent with pre-report expectations. Placements during May were reported at 92% of last year's levels, 2% lower than anticipated. Marketings last month were reported at 90% compared to last year, which was steady with expectations. Overall, the report is likely to be interpreted as neutral to slightly bullish, with the majority of the data meeting expectations and the lower placements adding a bit of a bullish tone.
So still, overall situation is friendly. Nothing's really changed.
Yep, exactly.
There's going to be volatility in the markets, of course. But what did cattle do on Friday?
Cattle futures were lower. Live cattle were 62 cents to $1.87 lower, and feeders saw losses ranging from $1.17 down to $1.72. Cash cattle trade was light last week and substantially weaker. In the Southern Plains, cattle were $6 lower compared to the prior week at $2.28. Up here in Nebraska, cattle were $4 to $6 lower at $2.36, and then over in the Western Corn Belt, cattle were $3 to $4 lower at $2.36 to $2.38.
Outside markets this morning, stock market is close to flat, pretty quiet. Treasuries are pretty quiet. Crude oil is now up 52 cents in the August WTI at 74.36. Not the reaction people had expected following the attacks on Iran. The U.S. dollar is sharply higher, and gold is off $2. So no, it doesn't appear as if World War III is starting right now, at least based on the markets. Have a great week, guys. I'm out till Monday the 30th, so enjoy yourselves. See you later.